Hello everyone. Today we will discuss about global market outlook and then we will see what is the short-term plan for Nifty and Bank Nifty as well. So starting with S&P 500, the chart which you're seeing right now has been trending all the way on the upside. So this is the weekly chart and we can clearly see after the COVID fall, it not only recovers but also goes on the higher side. As much as the fall was there, it has gone way beyond the fall. The rise was also faster. So one thing is very clear that the rise which has been happening on S&P was more or less going in trend, and then there was a slight blip on the downside, and again we can see a sharp pull happening lately. The most important part is the latest up move which has happened in S&P 500 and which is actually kind of short-term rally which has happened in a smaller amount of time, let's say in the matter of last 2 months or so. So we need to be now very careful because S&P 500 is trying to reach towards the higher end, and if we try to bring in 20 and 200 EMA as well, we can clearly see it's way far from the 200 EMA, and also from 20 it has sharply moved higher. So coming towards downside or more or less a small fall is kind of expected in S&P 500. So global market can become kind of jittery because the kind of sharp rise which has happened in the last 1 month or so can basically reverse, specifically in the month of October. If you see the same thing on daily time frame, just to understand how things are moving, so we can clearly see here the price has been going higher on S&P 500 randomly one way to the top, and now we can see there is some pause activity taking place at the top. So after this, it is trying to go now sideways, and ideally when it starts going sideways, that shows the momentum of upside is basically paused. The second most important thing, it should not get into this kind of structure where formation of M comes into place and then you can have downside. So the most important thing is to wait and watch the S&P 500, which will now be very, very important for our market stability as well. So Indian markets to be stable, we need always the global markets also to remain stable. But if you have a kind of slight discomfort or small fall happening in the global market, then we can see Nifty also sliding lower. So most important is I feel that S&P 500 can lose momentum and can give some upside which has come through for a small downside of almost 3% or more. So if this kind of downside comes in, let's say in next month or so, you can have a small bearish trend coming across the global markets. So that's the take on S&P 500. Seems to be forming a double top on the daily time frame, but to get a bigger view, obviously on the weekly chart, it seems to be good. So there is no rush for weekly chart. It seems to be decent, but we can clearly see the last rise which has happened over here is very, very fast. It's more faster than this rise. So in simple sense, I can say just see the kind of steepness which this rise has, the previous rise, and the rise which has happened right now. So the rise is way more faster most recently. That's why there can be a small bit of downside or a hiccup which will come almost like 2 to 3% or 4% of downside in S&P 500 is quite possible. And that's why I'm more certain that small downside can come through. And on daily time frame, it is kind of forming the double top fashion. Seeing the other parameters and the other index of US markets, specifically the markets such as Dow Jones and the Nasdaq, we can see the same thing happening over there as well. In the Nasdaq also, we can see the lately sharp rise has taken place, same like S&P 500. And as I said, the difference over here between S&P and Dow Jones is Dow Jones has already started going down. So S&P is still starting to go sideways, but here we can see Dow Jones has started going down. That clearly shows the bearish trend has kind of started compared to the S&P 500. So on a smaller scale, even on daily time frame, it is very clear Dow Jones kind of becoming much more bearish compared to S&P 500. And seeing the IT index of US, which is Nasdaq, is much, much stronger. So there are mixed signals. IT is stronger or Nasdaq is stronger. Dow Jones is weak. S&P is sideways. So the next root cause of downside obviously can be Nasdaq. If there is any kind of downside coming in Nasdaq, Dow Jones is already down and S&P will feel the burn to come down very, very fast. But we should not rule out the next 2 months is going to be very, very cautious movement to take place in the global market, specifically an S&P 500. Now, going out from S&P 500, if I try to see the US bond yield, and if I try to see the US bond yield has been trading at 3%, came down because of pandemic almost to 0%. It climbed back to almost 1.8% or so. Now it did slide it down, but lately, if you see, the interest rates have also slided on the higher side. So because of this rise in the interest rate, the Feds have taken a decision that inflations are rising, and they would basically go out tempering the funds which they used to flush into the system. So basically, the liquidity will also dry up a little bit, not very much, but yes, little bit. And the rise of interest rate is actually not good for the entire global market. So this will be a cause of worry as well. We need to wait and watch the important zone which has been marked. If US 10-year bond yield also goes higher, then it can become a worrisome downside to come through on S&P 500. So we'll keep close eye on the bond yield. As of now, it's kind of going in the sideways manner. Important is this range of 1.8 to 2%. And within that range, there will be some slide more of the downside. So not a sharp rise can take place, but yes, any bit of rise in US bond yield from now on will bring some jitters to S&P 500. Coming down towards the US oil, we have seen a sharp slide taking place already in the commodity cycle. So that's very good, because the latest earnings which have come through about all the Indian markets, we can see that a lot of pressure has been there in the EBITDA margins because of the rise in commodity prices. So supply has been less and demand has been kind of same, and that's where the production choke has given a good rise in all the commodity prices. So we see a sharp rise of oil also taking place all the way to the top. There was a slide last time as well, and then you had a sharp rise again all the way. But this small breather is actually good for Indian market plus the global market as well. So that's good. And lastly, if you try to see the dollar index and the gold is trying to inch higher. Now, what does gold suggest? Whenever gold starts inching higher, that is basically a sign of worry. People are kind of rushing into the safe havens, and we can clearly see from the higher side, gold has been closing down all the time. He was trying to go up, again comes down, again comes down, again comes down. But now lately, if you see, it is not coming down anymore. It's kind of making a good move on the upside. So one thing is very clear, gold is kind of taking a good breakout on the upside, which is kind of an inflation hedge where interest rate can also rise, or the bond yields are going to rise. And that is giving some kind of comfort for people to rush into gold. Now, whenever gold goes up, the ideal scenarios are the equity markets will also feel some pressure. And that's where we clearly see that commodities are not on a tear right now, but gold and interest rate can play a huge role in bringing the S&P 500 a little bit on the downside. And why am I more certain? Because of the dollar index. So what we are seeing over here is the dollar index. And if you see from the higher base, it had come down almost towards 90s or so and came back. And now it is trying to inch on the higher side. Now, whenever a currency, let's say of US dollar, is increasing or strengthening, that means the economy of US is doing well. But apart from that, the currency market will also take a breather, because if the dollar goes up, so the good part here is the commodities tend to go lower. So that will be a good basically for Indian markets, where the commodity prices world over goes on the lower side. But the more important part over here is, as the dollar index goes up, so chances of Fed thinking of going and increasing the interest rate in next 3 to 6 months is also higher. So rise in index of dollar basically means dollar is strengthening, and normally dollar or any currency of its own country is strengthening. That means the rise in interest rate will come through. So that's also very, very important, that dollar index is signaling a good breakout taking place that will result into rise in interest rates. If interest rates are rising, the liquidity in the market will go out. And if liquidity is going out, people will rush towards gold as safe haven, and the equity markets can start coming down. So all this is kind of, we can say everything was in a lumber sideways, but now things are going kind of in a breakout zone. So we can clearly see the dollar index also dancing on the upside, which is actually not good. It's good for US, but not for Indian markets. So now coming out of all this, what is the summary? The summary is, if I try to see the S&P market along with the other parameters like the bond yields, the US oil, the gold, the dollar index, I clearly see, and on back of the sharp uprise which has happened in S&P 500, I feel there will be a breather and a short downside will come through. So 3 to 4% of downside is quite possible in S&P 500 in next 2 months. And I also have the monthly chart of S&P 500 as to how S&P 500 has done over the period of last 3 years or 5 years. If you see this year itself, right, starting from 2021, it was a flat month in Jan, then it went 2%, then it went 4%, 5%. So this was a good rally taking place in March and April, 4 and 5%. And then it was flat again, 2%, which was okay, and then minus 4%. Now this 2 and minus 4 kind of nullified everything. But the most important part over here is in month of October, it went up by 7%. And this is what I was trying to show you on the chart as well. The rise has been steep. So there has to be a small fallout which will take place. And we need to be ready if the fallout is taking place, bond yields are going high, Fed is tempering, and if the dollar index starts swinging higher, you will see a little faster fall also coming through in next 2 to 3 months. So before the next earning quarter, we have to be very, very cautious on the stand of little bit of brunt on the downside is clearly possible in S&P, which will also bring in a downfall on Nifty as well. Let's now go out and check the Nifty, the Indian market. What we see over here in the Indian market also, it did go sideways all the way over here. Then there was a sharp rise which took place and it never took a pause. If you see right from here, it's only been climbing, climbing and climbing. So that's where another problem is. Same as S&P 500, we can see that Nifty has been climbing on the higher side. And that's why we saw the high which was made around 18,700 or so, 600 or so, came down all the way towards 17,500 or so. So if we actually see right from the top how much correction has happened in the Indian markets, we can see almost 5%. So 5% is not that big. The only difference was it came back to back. In a matter of 2 weeks, you basically got 5% fall, which is actually much more discerning because the rise was very, very fast. So fall will also be a little faster. Now we can see that the last 3 weeks has been running into the shadow of the big red candle. So that basically shows that more consolidation is happening at the higher level. And if S&P breaks down, so if there is an S&P which will break down, which we have been seeing over here, so I do not see that Indian market can give you another 5% of downside. So when Indian market can give you another 5% or 3% of downside, it will clearly bring Nifty towards 17,000 zone. So what we are trying to understand over here, we have to be very cautious on the downside now for Nifty because it can easily come into the good zone of 17,000 or so. And I told you the reason because S&P 500 has gone way too high. And if there will be a slight bump in the S&P 500 coming down 3% also, I can tell you that Nifty will sharply move lower. Now, what can help Nifty not to go down this much or maybe sustain towards 17,200 or so, maybe another 500 points or 600 points and then reverse? It is only the inflation. If the commodity index does not rise higher, then we are in a safer hand. And if you actually see the commodity index, we saw the oil dropping down. So that's also good for India. But if I bring in the Indian commodity metal and the commodity index, so I can clearly see over here, the metal has been rising higher and higher right over here. All the way it's been rising all the way through. But now if we can see right from the top, there was some breather in the commodity space as well and the metal space as well. So if the metal starts going down, and that will be much more interesting to watch, if metal goes down, then we have some kind of breather for Indian markets, else we do not. So we are only banking off the commodity or metal index going down, and that will give you a good kind of sustenance base for Nifty not falling down. So that's one thing. Second, if I see even the commodity is also in the same space, right? It's been rising and then we have the downside coming over here in the commodity as well. But we have to wait and watch for next 2 weeks to understand whether, yes, the downtrend is basically getting into its way or not. But metal and commodity has given their gains from the higher side. So those are good pointers for Indian market. So overall, I feel that we have to be a little cautious now on Nifty because if S&P starts going down, I see another easy 3% fall to 5% fall on Nifty to also combine. Now, we had seen that this time the rise was fast and the fall also came, and now it has been going sideways. But Bank Nifty is a different story altogether because in Bank Nifty has not got good support as far as Nifty is concerned. So Bank Nifty did go rise all the way to the top, making a fresh highs of its lifetime, going from 36,000 to 42,000. And the irony here is this quarter results were fantastic from bank's perspective. all the NPAs were out. They were not there any kind of pressures on margins, and as well as the NPA provisions, all those were taken care of. So this was one of the best quarter of Bank Nifty. But post result, we see the downside. Now, this kind of downside basically came into the heavyweight stocks like Kotak, Axis Bank, ICICI, HDFC. That's when the FII selling is very, very high. So the main idea over here is there has been a good amount of FII selling, even in Reliance Counter, even in ITC. So we have to be more cautious because FIIs are selling, then the downside can come much, much faster. But one thing is very sure, the rise which took place in Bank Nifty in the last you can say 4 weeks or so, the same amount of downside has come through. So this is a good formation for Bank Nifty because the upside euphoria has been taken out and the downside might be now limited for Bank Nifty. So that's actually a good pointer for Bank Nifty, that downside might be looked less, but even if Bank Nifty goes down by 3% or so, it can add another 1.5% to Nifty as well. So downside is still open, but we can say yes, the sharp euphoric upside and euphoric downside is already done. So this can be a good congestion zone for Bank Nifty to take some support, and we can look for an uptrend. But going for a good positional trade on the upside might be risky now onwards. And I would suggest you to watch the S&P 500 before taking positional trades in Nifty and Bank Nifty. I would be more cautious, and I will take out a good positional trade in December end or starting Jan, but not as of now. We'll keep doing this kind of review so that we are on monthly basis, so that we are in sync with all the global markets and the Indian markets, whether they are giving us some round of up movement or down movement or so. But right now, things look to be very, very cautious. So we need to be very cautious on Nifty as well. Another 3% of downside is quite open, might be go up for a couple of days, but then you can have the next month also kind of bearish trend continuing on Nifty if S&P 500 gives the way out. Now, one good silver lining is if you see the mid cap and the small cap index. So the good part about mid and small cap, because if you actually see the mid cap rise or the rally has happened very, very fast, even in the mid cap. But the good part over here was that here the fall came in, but again the rise came in. So as far as the Nifty and Bank Nifty goes, the mid cap has not seen the brunt. So you can have a round of fall in the mid cap. So be cautious. Try to shift towards high quality stocks in mid cap and small cap space, because the kind of downfall is not being seen, which has been seen in Nifty and Bank Nifty. Now, that kind of downfall which came in Nifty Bank Nifty was because of FII selling, but you never know when the DIIs also get into sell or mutual fund also start selling, you will see the brunt coming into the mid cap and the small cap space. So you have to be now very cautious, try to see your portfolios, try to revise your portfolio, get into good quality of mid and small cap stocks before the fall. Okay, even if you have small gains in small and mid cap, I would say exit those, wait out and get into the good quality stocks for the next 6 to 8 months, or maybe for next 1 year or 2 years or so. So that is very important, because both, if you actually see the mid and small cap, the rally has happened very, very steep. I'm not saying the upside is not there, but after a steep rally, generally a slight of downside or discomfort will come through. Even if you see in the previous one, sharp rally and then downside came through. This is also double the rally of this one. If you see over here, this rally, and if you see this rally, obviously the lines which I have made, this one is way more double than this one. So obviously some discomfort will come through. And I see that maybe if Nifty starts falling from here on in the next 2 weeks or so, and S&P goes down, Nifty goes down, you will see the mid cap and the small cap coming down very, very fast. So we have to be very, very cautious in the mid and small cap space, and also cautious in the Nifty space. And please try to work out and see what S&P is doing from day to day, because now onwards S&P will drive the Nifty, and it has already driven. So I basically feel that downside is open for S&P, and that can give pressure on Nifty as well. The last piece of puzzle, if you want to basically see the S&P and Nifty, and then I want to combine with our mid cap and small cap for our portfolio holdings. If you see the ratio of mid cap to Nifty, now this is very, very good, because if you bring in the ratio of the historical data of mid cap to Nifty, and I see that the euphoric zone had happened in 2017-18, where the ratio of mid cap to Nifty was somewhere around 1.8 to 2. That was the higher zone where we can say that, okay, the euphoria is happening in the mid cap space comparatively to Nifty. Now, what I assert or see over here, if mid cap does not go down and Nifty goes down more, this ratio, which is kind of trading at 1.7, will rise to 1.8, 1.85 or so, and we have to be then become very cautious on mid cap. So rather than waiting for the euphoric zone to come in mid cap and small cap, I would highly suggest that start shifting into amazing or good quality of market leaders in mid cap and small cap space. This is not the time to venture out into the penny stocks or stocks which have given kind of bad earnings. I would suggest please exit your stocks. Do not rely on the stories. Again, going out over here in the small cap to Nifty ratio also, it is same. In the 2018 or so, it was the highest, and we can clearly see over here, it went almost towards 0.8 and maximum towards 1 or 0.9. And we see that it has already reached kind of above average and to the average range. But I feel that from around 0.6, 0.7, it can reach easily towards 0.7 or so if Nifty goes down and small cap does not correct. So any kind of slide in Nifty, and if mid cap and small cap do not correct, these ratios will go higher back to 2018 levels, which will bring them to euphoric level, or we can say that small and mid cap will trade at premium to Nifty in terms of valuation, and that's where the correction or the shift will come in. Then large cap will start performing and mid and small cap will not perform. So, well, the earnings of mid and small cap has come good, so that's the good part. But there was a common consensus for mid cap and small cap earnings. Everybody had margin pressures because of rise in commodity prices, and that's why I reiterate that if the commodity prices do not go down, so all you need to track is the commodity index, like we have the CNX commodity index. If the commodity index does not go down, I can tell you that the next month results or next quarter results, which are in Jan, will face a huge burnout for mid cap and small cap. So we have to keep this on our radar for the next earnings, or if you are trying to hold some companies, if they are having some kind of margin pressures because of commodity. First round of margin pressures, majority of companies have passed on, but second round of margin pressures, I don't think majority of the companies will pass on. So that is very, very important space to look out for. The CNX commodity index, and you can also see CNX metal index. All these, if they kind of push themselves on the downside, it will be fantastic. So that will give some breather for mid and small cap. We can say some support for mid and small cap because the earnings will come out fantastic in Jan, and the margin pressures, if they are relieved, then it will be good for them. But for Nifty and Bank Nifty, we have to be very, very cautious and focus on S&P 500. Okay, so sharp rise will bring in a small discomfort of 3% of downside, which will also translate into Nifty downside of 3 to 4%, which can bring Nifty from the current juncture. It might kind of rebound from these juncture, but it can bring further downside, almost like 1,000 points more, or even like 1,500 points more towards 16,800 zone. Now, how can upside come in Nifty? Let's say if S&P sharply moves higher, or any kind of comments come through Indian governments, or any kind of comments come through the Fed. The most important part over here is I do not see Nifty going higher unless and until 18,200 is breached and sustained on the above side. So 18,200 is a sacrosanct level, which we have seen multiple times being rejected from 200 to 300. So 18,200, 18,300 are the levels. If that is not being taken out, there is no upside in Nifty. Right, so that's the take on Nifty, Bank Nifty, and the global outlook. I hope you got some insights. Do comment and let us know any questions which you have. We will try to answer them personally to each of your comments. Thank you very much for joining in, and meet you for live commentary on Nifty, Bank Nifty on Monday.